Hey, Yetta, I've been rethinking about mortgage insurance.
Why? We've always said, or pretty much always said, it's a bad deal.
Moving forward with the Decker team. Moving forward together with the Decker team.
So we're thrilled that for over 30 years, we've been able to come alongside you, not only selling, buying, and investing in real estate, but coming alongside you to build your faith, build your fund, build your finance, and even strengthen, heal, and flourish inside relationships. And so we're going to discover in this segment why mortgage insurance actually may be a good deal, may be the best deal to get.
Could be.
Could be. And so the reason we talked about that we have not recommended it often, and we in fact have never gotten it ourselves, was primarily because it goes down in value, right?
Some
What's
do.
covered. Okay, many go down in value as the mortgage amount becomes less.
Yes.
Because it's actually mortgage insurance,
Right.
not house insurance.
Right. And so typically it was better to just buy term insurance for the amount of your mortgage. And it frequently was less expensive,
Yeah.
covered for the full amount, and ran for the whole time at the high amount, not your paid down amount, right?
Right. At whatever amount you purchased in insurance, the term insurance didn't decrease, whereas many mortgage insurances, as the amount of the mortgage that you owe goes down, so does the amount that's covered, but your premium didn't necessarily go down to reflect the decrease.
Yeah, like the last year, you maybe only owed a couple $1,000s and you're still paying a high premium for that couple $1,000s of insurance. Well, sometimes they have ones that don't go down, so that's another thing to look at. The other thing is, not everybody is qualified to buy term insurance. And with mortgages getting bigger and bigger with the house pricings going up, it's a significant, maybe people are having $500,000, $600,000, $700,000 mortgages. That's a significant amount. And if they don't qualify for life insurance to cover that.
Like a term life insurance, because you probably wouldn't use whole life insurance but most wouldn't, just because it's cost prohibitive, right?
And sometimes people have pre-existing things that have happened and they don't qualify. But some of the mortgage insurers don't call for a medical exam or a medical history. And so you might get insurance when you otherwise couldn't.
Right, which is why you're rethinking that maybe mortgage insurance is a much better option for some or for many than we would have previously said.
Right. In the past, when we had the mortgage application or the mortgage approval and down there it said insurance and how much it was, I just automatically go, no, thank you, and sign off that I didn't want it. Now what I'm saying is, okay, you're offering me insurance. Let's look deeper into what does that insurance cover? How much does it cost? And is it a good deal for me because I don't have other options, right?
Right.
So that's what I'm going to look at.
Even if I have other options, it may still be my best option, is what we're saying now. And so the great news is, as we're talking about this, it's like this is the investment segment or episode that we're doing right now, but it's investing in the right insurance to protect you in your home. And if you don't know the details around the insurance and which ones you might want or might not want, you can't make a great choice.
That's
It
correct.
just kind of gets made for you. And we know that choice is the one thing we all say we want, but then we don't learn about the different types of insurance and why we're investing so much energy in this conversation. So we want you to always, and I'm going to use the word always, to make a great choice. And you can't make a great choice if you're not informed, if it's not an informed choice. So somehow you need to get enough data so that you can compare apples to apples, even in terms of insurance, not apples to oranges.
Exactly. And maybe it's a fact that you find out the information, you get the copy of the policy from the lender, and you take it to your insurance broker and say, hey, can you match this? Can you make it better? Can you get this cheaper for me? Whatever the case may be, and then make your comparison. And then, you know what they say? having a choice and being is powerful. Like that gives you power. When you have choice, you have power.
Right. And we don't want you to get an education, because really that's what you're going to get if you don't do the research in advance and find out the hard way that you should have had or could have had a better policy.
Yeah, that's when you get experience.
Yeah, it's expensive.
It's
an expensive education.
Yeah. And, we had a friend, let's just call him Dave, and Dave bought mortgage insurance. And subsequently, his wife passed away, and the mortgage insurance paid out the mortgage. And that really helped his family. Like, first of all, without two incomes, he wasn't going to be able to stay in the house. The other thing is, when you have an estate, let's say you're just by yourself and you have the estate has sometimes a hard time paying the mortgage, and it can't renew it if it's up for renewal. And sometimes the probate and all that stuff takes months, whereas this would automatically kick in. They'd pay off the mortgage, and now you just have taxes and insurance on the house to worry about as an estate. So it's covering two people, really. If you got two people on title, three people on title, it's covering all of you. So if any one of you passes away, the mortgage is paid off. So it's got that advantage too.
Right. Whereas in term insurance, just so that we're being crystal clear here, and maybe you know all this stuff, but maybe there's someone that's listening today that goes, I didn't know some of these things, and I'm so happy to know them. You would have to have term insurance on all three people if there was three people on title.
Right.
Rather than attached to the address per se and cover any one person.
And you need to look at that. And some of them even cover disability. So if you're disabled or unable to work, some of them cover the mortgage payment. So look closely at the policy and what it actually covers. That's all I'm saying is I'm rethinking mortgage insurance because everyone is slightly different. And for the purpose, your purpose, it may work. For someone else's, it doesn't. But you won't know unless you investigate.
Right. So really what we're saying is, just like when we talk about real estate, we're saying the three things you want to consider is location. Second thing is location. And the third thing in location. When it comes to any of the insurances, whether it's title insurance, whether it's property insurance, whether it's mortgage insurance, those are really the three that we've been exploring today.
Those are the typical three when you're a homeowner. Right.
Those are your typical three. You want to do research, and then you want to compare so you know what it is you're buying. Because we've been surprised, others have been surprised, and you don't want a nasty surprise.
No, you don't. And you just touched on home insurance, and we talked about that in the previous segment. And I just realized there's also things like for investor properties, right? And if you have a claim, your tenant may not be able to live in there. So you want replacement income. So it covers, could be for 12 months or whatever, it covers what you normally would have received. Because even if you get a claim, like you have a flood and the tenant has to move out and it takes 6 months to fix it, those 6 months, you got to pay the mortgage.
Right.
And some insurance policies will cover that for you.
And some won't. So ultimately, we're just saying, make sure you have adequate insurance and that you've done your adequate research to know that which it is you now have.
Yeah. We're grateful that you joined us on this Life's Inside Track, because when we move forward together, we've got this.
Moving forward with the Decker team. Moving forward.